Alright, hello everyone. This is OCBC Bank's third quarter 2025 results highlight dated 7 November 2025. Right, the CEO Helen is leaving. I'm trying to look at this because I'm quite interested in why the price spiked so much. Alright, I do own a position in OCBC and therefore my perception may be biased, right? Just to take note of that. Right, so let's dive straight into the third quarter results. Right, net profit is up 9% quarter on quarter, driven by 7% revenue growth. Net interest margin, right, is down 2%. Alright, so this is the key number that we'll try to look at. Right, so why is it down 2%? Right, because NIM moderated to 1.84%. Right, this is expected because interest rates are falling. Right, so net interest margin, right, which is what NIM is dropping. Right, so this means that for each loan they make less money. Right, how to mitigate this problem? Generally speaking, as the CEO says that interest rate cycles is normal, right? So how to mitigate this is they actually try to do more loans, right? That means as interest rate drop, people tend to borrow more money, right? So asset growth remains a focus, right? So they're trying to loan more money out, right? Non-interest income rose to a quarterly high, right? Mainly lifted by strong fee and trading income. We'll look at this in more detail later. Wealth management franchise continue to scale up. We record wealth management income, right? Later I'll show you why this is, I think, the key reason why the price has spiked by about 8 to 9% after this report come out. Right, banking wealth management AUM is up 18% year on year. Insurance business deliver a strong profit contribution. Right, asset quality remains resilient. Right, you look at their non-performing assets, no big issue. Right, no issue in terms of loan quality so far, as we'll see later. Right, we'll just look at the numbers. Okay, group net profit, right, unchanged year on year. Right, this is a good sign, and I will discuss why later for dividends. Right, quarter on quarter is plus 9%, but I won't worry too much about quarter on quarter because quarter on quarter got seasonality issues so I prefer to look at year on year results. Right, so customer loans is up 7% year on year, not super surprising given the fact that interest rates are dropping and people are borrowing more money. Right, deposit is up 11% year on year. Right, so this one is a good thing because this provides cheap money for the bank to lend. Right, so if you have CASA, right, CASA means current and savings account. Right, this is the lowest interest tier that the bank has to pay for money that they then lend to other people for higher interest rates. Right, then the spread is called the interest margin. Right, so the fact that they have more customer deposits is good means they have access to cheap money. Right, NPL ratio is unchanged. Right, this is talking about asset quality so it's actually still the same. Right, no visible issues there. Right, return on equity is 13.4%. Right, clearly below DBS. Right, we move on to this figure. Right, you can see if you look at, I don't want to talk about everything it's just that non-interest income is the standout performer here. Right, so later on we'll look at why this is so. Right, so we'll look at banking profits. Right, you can see third quarter 24 and third quarter 25, which what we should care more about. Actually, net profits is dropped by 5%. Right, total income as well. Right, dropped by 5%. Alright, and if we look at customer loans, is going up, right, by 7% as we have discussed earlier. Alright, CASA is up. Right, so this is one good thing, and this is also another good thing. Right, although these two are not so good things. Right, wealth management is a standout performer. Alright, I think this is what probably make the results of the bank look so good to the public. Right, or the result of why the price went up. Right, if you can see, there is a growth of 25%, whether you compare with third quarter 24 or second quarter 25, of which I think this is the more important comparison. Right, but you can see the numbers are quite flat until this quarter. Right, so this quarter is a standout for wealth management. Right, asset under management also growing healthily at 18% from last year. This is also important because the more assets you manage, the greater the absolute amount of money you can make. And of course, if they don't just leave the money there and do investments, you make even more money. Right, so that's how the bank works. Right, what's key about this banking, the wealth management side, right, is that the money inflow is very high. Right, so I listened to the transcript they said that this quarter, right, which is third quarter of this financial year, right, they actually took in $12 billion right? And this is record number because in the first 2 quarters of this year, this financial year, right, they only took $5 to $6 billion, right? So this is like more than double what they normally get in terms of wealth management, right? So this surprise upside lah, and the reason why the numbers have spiked, right? However, try not to be too excited by this because in the Q&A, right, the CEO said that you cannot expect fourth quarter to have such good big money inflows. Fourth quarter is normally quieter, right? So that's why we say that there's seasonality lah, and actually it's better to compare year-on-year results rather than quarter-on-quarter results, right? Because quarter-on-quarter, like fourth quarter is normally quieter lah. So the CEO said it's unlikely to be $12 billion of money inflow. So you cannot expect this number to keep being so high at 12 billion, right? So Great Eastern is also doing well, right? Profit contribution rose 50% quarter-on-quarter, mainly due to improved investment performance, right? So they were saying that Great Eastern, right, one of the things is that it's integrated with the wealth management side. So when the wealth management do well, right, they naturally push these people into Great Eastern products, and therefore Great Eastern also will benefit from the wealth management side growing lah. So it's actually very, very integrated lah, right? Unlike, for example, DBS, which doesn't actually have a insurance arm, right? So OCBC in that aspect has this advantage over DBS, and this Great Eastern side is the secondary side that is actually boosting the wealth management area, right? So this is part of why the performance looks good this round, right? I don't think there's too much to say about this, so I won't go about looking at this, right? But I like to look at this because I like that they gave a lot of information in these charts. You can see net interest margin is dropping steadily, right? Which is expected lah. So there's a 8 basis point drop here, right? From second quarter to third quarter, right? And because of that, net interest income dropped by 2%, right? And they actually break down what happened to this net interest income here, right? So the charts are very nice. This is a waterfall chart, right? So net interest income, what happens is that if you look at second quarter 25 to third quarter 25, you can see that the volume growth gained by 34 million, but the rate decline is loss of 116 million, right? So the increase in volume of loans is not enough to make up for the loss in interest income from the rate decline, right? So this is something that we have to look out for lah, but this is expected and probably baked into the price before the results ready, right? So this was not a surprise, right? So this is a negative but not a surprise. That means it was baked into the share price before the result. However, I believe the wealth management side, right, was not baked into the price before the result, and which is why it correspondingly resulted in a spike in the price, right? Then we look at net interest margin, right, which is more on this side lah, right? So they show what happened to the net interest margin over here. I don't really have too much to say about this lah, right? I think it's expected, right? But it's nice that they have a lot of nice charts to let you know what's going on, right? So the next part is this, right? Non-interest income, right? So just now that one was more on the interest income side, right? Net interest income side. Now it's the non-interest income side, right? So you can see that one thing good is that if you look across the board, right, the numbers generally are going up, right? And this is quite a spike up from the rest of the last 3 quarters and even higher than third quarter 24, right? If you look at the numbers, especially for net fees and commission, right, this is where the growth actually stands out. I think it's something like 34% higher, right? Okay, this is what I heard from the transcript, right? I believe it should be correct, 34%. Yeah, probably around there. Okay, I didn't check this map, I'm sorry, but I think it should be 34% higher, right? Then this is 18% higher quarter on quarter, right? Because this is what the transcript said, right? And a lot of this benefit, right, actually come from corporate and wealth activities, right? So if you look at also, right, percentage group income, right, it has gone up from 36% to 41.4%, right? So what I'm trying to say is that the non-interest income is becoming a bigger component of the bank, right? Which is a good thing in a environment where interest rates are falling, because you expect your interest income to be falling, right? So your non-interest income is going to make up for it, okay? Right, we'll look at wealth performance here, right? So here they talk about because someone asked how important is wealth management to the bank, and this is what Helen said. She said that Asia is getting richer and Singapore is a center for the ASEAN region, right? So as Asia gets richer, and even the ASEAN region also will get richer, right? Singapore is a center for money inflow because we tend to benefit when things are unstable. For example, in COVID situation, we actually manage COVID very well, right? So as a result, people see us as a very safe place to come and do business and park your money, and the wealthy start to think that it's a good thing to have a family office in Singapore. So I believe that's why wealth management is starting to look very nice for OCBC Bank. And let's look at these figures over here. If you look at this, for wealth management, right, the net fees and commissions, right, initially was quite flattish, right, until this one, right? This is a significant increase. You just look at the line here, this is the average in the past of the dark blue line for wealth management, right? Then it jumped to here, right? I didn't calculate the percentage but it's quite clear it's significant jump, right? So so this is quite an impressive figure. If we look at the numbers, right, so wealth management fees is up 35% year on year, right? So that's quite impressive, but these 9-month figures, right? But in any case, I think this is the main reason for the spike in price for OCBC. Right, so trading income, this one I don't have too much to say because I feel like trading income, I guess wealth management does help somewhat, but generally speaking, trading income a bit difficult to predict its replicableness, right? So I don't really want to talk too much about this. Okay, in terms of cost, it's well managed, similar to DBS, about 40%. Right, then loans growth 7%. We talked about this before, right? It's about their spread of loans is about 43% in Singapore, 23% in Greater China, right? So loan quality, no issue I can go through the numbers, but essentially there's no issue with their loans, right? So no need to talk too much about this in my opinion, right? Allowances as well, there's no significant changes in the allowances, right? Asset quality is flat since June 2024, right? So the allowances for non-impaired loans has always been 0.9%, right? So since 2024 June, right? CASA increase, we talked about this, cheap money, right? Not going to talk about it too much, all right? I think we talked about this as well, right? So this I think is more or less the last slide already. So what other things was discussed in the transcript, right? They are not worried about job losses due to AI in the bank, right? They say they don't foresee them cutting people, even though AI has improved efficiency because they say that if AI helps to do the job properly, the relationship managers has more times to talk to the client more, something like that. So they probably won't fire people due to AI, right? They expect 2026 to have a lower growth across the world, right? 60% payout ratio, this was announced sometime in 26 February 2025. So this is known well before already. So it's about early this year, they already know the payout ratio has gone to 60% payout ratio. And I'll discuss dividends in the next slide, right? But do note that the 60% payout ratio is based on the fact that 10% is special dividends. Actually, it looks like capital return. That means similar to DBS, they don't need to keep so much money, they're trying to return it to access to shareholders. So in the longer run, it's likely to be 50%. But at least for FY 24 and 25, I believe they are keeping the 60% payout ratio, right? The tariff, they said, impact may not be fully felt on the ground yet. So that's something that the CEO thinks. Right. So this is a slide that this is a slide that actually came from the first half 25 results. Right. So I believe that the current price, right, is actually factoring in this kind of dividend structure, right? Because this is how I think about the dividends, right? So what happened to the dividend is that, so you see FY23, they are going up from 40 cents in the interim dividend to 42 cents, then it went to 44 cents, right? Then it went to 41 cents, then it went to 41 cents. Then what is the likelihood of the dividend final dividend at the end of the year lah, right? We don't know the answer to this, but if I look at the trend, the trend looks like that 40 cents, 42 cents, 44 cents, 41 cents, 41 cents, and then if I were to predict the next one, I think it's 41 cents. I think it's flat, right? So this is flat, right? And this 41 cents was 44, 41, 41, yeah. So this one was plus 16, right? Because this is plus special dividends, right? I did the calculation on another slide. Unfortunately, it's not in this video, but I'm going to tell you what I calculated, right? The price spike, right, from the time of the before this report announced and after this report announced was actually about 9%. To the highest price, it was about 9%. At this point, as of this evening, Friday's close is about 7+% price spike in terms of the price of the stock, right? So the stock jumped by 7+%, right? That means even off the highs already, right? At this price, right, the anticipated dividends, if it's 41 plus 16, right? So that means something like that, right? Together, the dividend is something like 5.3%. Okay, based off Friday's closing price, right? So I think the market is pricing in that this dividend can be sustained, right? Because I think before this report, I suspect they thought this dividend cannot be sustained, primarily because of the fact that interest income will be dropping and net interest income, non-interest income will be flat. But now that non-interest income looks like it's rising and is becoming a bigger proportion of the income of the bank, right? As you can see here, right? Yeah, so this number here, right, is becoming a bigger proportion of the bank's income, right? It's possible that the overall performance for the whole year is flat. If it's flat, then I think the market is pricing in that this dividend 41 cents will be held. Because otherwise, right, if not for this report, I think people expect that they will not get 41 cents for final dividend. Because if you look at the trend, it's a dropping trend here, right? So with that, I end my presentation. Please note that none of this is financial advice, right? This is just my take on the market. And with that, I'll end the presentation. Thank you very much for listening. Thank you and goodbye.